Righto, money miners. Trav come in with some fucking good energy this morning. It was positive, it was big. You could tell something was brewing, and you have... There is nothing else like this in the world. This is the Anglo BHP saga update. What is the term?
Oh, mate, this is as good as it gets in live M&A. Two of the biggest mining companies in the world battling it out in front of everyone, both at the same event, in the last couple of days, both on the microphone, pleading their cases of why one should be taken over by the other or the other one should go it alone. And thankfully, it's a fucking deal leak, which means we get to talk about it instead of them just fucking coming out with a surprise, agreed merger. This is so much more fun.
Oh, didn't Mike Henry love that deal leaking, hey?
Oh, BHP-Anglo, thanks for giving us such a great opportunity here. Boys, take it away. Trav, first set the scene. There's been plenty out there. Where are we at right now?
Well, I'll jump straight in.
Fucking get in there, JD. Get it. Hit the bloody thing.
We've got a lot of thoughts to share on this one. So, to start with, like you said, Matty, why are we so pumped about this? It has been ages since we've seen a deal this big in the mining space, and a lot of the big deals from way back when ended up pretty disastrous. But even in the context of the broader market, fellas, this is a huge deal. I'll chuck up a chart now, and you can see this is the biggest lodged or proposed deal this year in any sector. It's chunky, right? And we've seen over the past decade or more, the majors, the big mining houses steer away from big M&A because it ended up so poorly, coming and through that last cycle. And then you also have the CapEx spend changed drastically. I'll chuck up another chart now. CapEx really came off. There was a change in mindset at a lot of these mining companies to just return any free cash flow that they got to shareholders. And, to an extent, still invest in the assets. It didn't completely disappear. But you get things like BHP's capital allocation framework coming out the back of this period, all these sorts of, similar strategies and frameworks from the major mining companies, because that's what shareholders wanted.
Because they destroyed capital, so you have to give a framework to give it back to the shareholders, mate.
Exactly. A framework is what they want. And, the same can be said for the oil and gas sector, and we've seen some bumper deals in the past year as well in that space as well, because I think I saw a stat that over that 2010 to 2020 period, something like every 50 cents of a dollar earned was just destroyed. So that really got at shareholders. It marked down the multiples that all these companies are trading at. And you see this period where the companies want to return, they want to simplify their portfolios, which, BHP is case in point in to simplify the suite of assets that they've got, prioritize capital returns. And ultimately that means, less mines are developed, and that's how a cycle sort of plays out, right? And now you get this projected project shortage, across a whole suite of metals that we're talking about now, looking forward into the 2030s. And this leads us to big scale M&A.
Hell yeah, mate. What a time to do it too, right before the commodity bull market takes full effect.
The super cycle.
Oh, Dave, because the funniest thing was the whole Anglo bloody presentation. It's like, nah, we're going alone. We're having a revamp. And it's like on the back of this deal.
Before that, though, mate, BHP came in with a second bid. Now, this one didn't get disclosed immediately.
We actually haven't covered that yet.
So, let's just bloody fill in the gaps, JD.
Let's do a bit of an overview of the past couple of days, because a shitload has happened. And then, pretty much every point I'm going to address here, we're going to dive into in greater detail, because there's that much bloody fascinating stuff going on in each point. So, to start with, in a nutshell, you've got BHP revealing that they'd made a revised proposal on May 7th. This was a 15% increase in the merger ratio, still came in, below what Anglo's stock had been trading at. Then on May 13th, this was rejected by Anglo's board, but that only came out in the day after that was all revealed to have happened in retrospect. Then you've got on May 14th, Anglo announcing the big new shiny strategy. We're going it alone. They'd been talking for quite a while, for over half a year. They'd said everything is on the table. They are looking at every single asset. We spoke about this a month plus ago. in terms of platinum. They were looking at, in Amplats, that is, they were looking at every single option to, cut spend, extract value, and, de-lever and safen up the balance sheet.
Fuck
Interestingly,
it off. Is that the technical term for it? Fuck. Just
for a lot of the assets, that is exactly the term we're talking about, Matty. So you've interestingly seen in the back of that Anglo stock has retreated, perhaps people thinking the deal might not go through, and BHP stock has jumped. You've also got both CEOs, Duncan and Mike, presenting at the Bank of America mining conference in Miami. Now, Duncan had also spoken just prior on the back of the strategy coming out, and there was a huge Q&A there as well. So there was lots for us to pick over on in terms of analysts asking questions to these guys and the responses that they came back with. So we've now got less than a week in which BHP can state its intention to make a firm bid, or they're out for 6 months. They can't do anything for 6 months. Anglo and their board can extend this timeline. It seems a bit unlikely, but who really knows if they will, and allow BHP to come up with something more substantial. If a formal offer is put forward but fails, they can't put another bid forward for 1 year. So, in the background, you've got these UK takeover code rules guiding how each of the companies, each of the CEOs can talk, and they've sort of interpreted it, in my opinion, in slightly different ways. I think Duncan's been a bit cagier in what he's been coming forward with. They can't say anything in terms of numbers or anything like that. And it's very noticeable in the presentations, and I'm sure these guys have been schooled to death on what they can and can't say. But it's just worth noting that they're a bit stricter than other jurisdictions in how they can talk about the deal whilst it's going on in the background. So with that all sort of said, I reckon let's get into it, and let's start with the new Anglo sort of go it alone strategy and what we kind of think and what the overview is.
Look, JD, let's hear it from the mouth of our CEO, Duncan One Blad himself.
The right approach is to execute a radical change agenda. We will focus on 7 high-quality assets in 3 commodities: copper, premium iron ore, and crop nutrients. Steelmaking coal, Anglo-American Platinum, and De Beers will be divested or otherwise separated from the group in the right structure to maximize value. The main focus of the group will be its world-class copper portfolio alongside a premium quality iron ore business and the long-term potential of Woodsmith.
Now, JD, I know it's bad taste to brag about these things.
Trav, you're your own boss, mate. You do whatever makes you feel comfortable.
I got a message the other day saying, "You're on the money with Anglo," and I was like, was I? I had to re-listen to what I said about it a couple of weeks ago, and because I was right, I'm going to play it. Well, here's what I think. If I was Elliot, here's what I'd be pushing Anglo to do. I'd be encouraging Anglo to straight bat, knock back the BHP second bid if it's low ball, spin Kumba and Amplat stakes anyway, right? It's Anglo is a complicated story, right? It's this hodgepodge of different assets, different commodities, different jurisdictions. And so it trades at this shit valuation, shit multiple, because it's not a simple story. Simplify it and you will absolutely be rewarded by the market for having a much simpler story. So pursue that. Run a sale process for De Beers, get what you can for it. I think it's a zero. Personally, I think diamond market's fucked as a result of lab-grown diamonds, but see what you can get for it. And then remain extremely prudent with any marginal spending on Woodsmith. Just don't that thing could be a cash sink, right? Just be prudent as all hell. So 4 out of 5. That's not too bad. I'm pretty impressed with that. The
high distinction at uni was distinction was 75. So
thanks, mate.
Well done.
Yeah. So they're throttling. Okay. So we heard what they're keeping. They're keeping the copper, the iron ore, and Woodsmith, but they are throttling the shit out of Woodsmith. It's we're going to bloody dial it all back. And the surprise to me was the fact that they're divesting the coal assets and retaining Kumba. So I got that one a bit wrong, but I'll take it. I'm happy with that performance. I didn't even steal that opinion. I came up with it myself. So I'm quite proud of my hit rate there.
Yeah, I wonder. I don't know what that feels like.
Anyway, I think we're going to give a bit of our thoughts on each of the parts of this portfolio and how they all come together and what it actually means for Anglo. Have they made the right decision here or not? What do you think about retaining the copper, JD? It's a pretty fucking straightforward one, that one.
That one was, like you say, very straightforward. I did see some investment banks put forward, why don't they just do the sort of counter thing to what everyone's saying and sell the copper? But it just doesn't fly because of what I think we spoke about in a previous potty. The tax implications are just way too big. So, you know, that aside, you know, it was quite straightforward that copper was always going to be kept. And then you've got retaining Kumba and Minas Rio. So Minas Rio, not surprising. Kumba, a bit more surprising. As a reminder, Anglo are 70% shareholders of the publicly listed company Kumba Iron Ore. And I think that the key with this one, fellas, is South Africa. So like Anglo and South Africa have a huge history. You know, it's a company that was started there. And they've made a big deal of how BHP has treated South Africa. And I think that, you know, that's a real battle line in this M&A and how it's playing out. So I think they couldn't logically make all those arguments. And then given that they are spinning off Amplats already, I know there's manganese and some other assets in South Africa, but I don't think it would have been palatable to just do exactly what BHP sort of wanted and spin Kumba, spin Amplats as well. So I think that's the key with that one. What do you guys think?
Yeah, Kumba also spits out cash too, and so if you if you can stomach the geopolitical and you know, like reality of it, and you've got good relationships, and you know, for Anglo it probably you know, helps them in some respect. I can understand that. Yeah, mate. Woodsmith though, keeping Woodsmith. Yeah, I mean, you know what I think of this. We actually put some word on the decline about this one, and I think for fucking polyhalite, a commodity where there is unproven demand, how the hell are you going to like ask 70-year-old farmers to just, you know, adopt an unproven product on their crops?
Oh, mate, farmers love change. They love giving things a go. Yeah, it's only their frigging livelihood they're gambling on.
Yeah, you might know the other farmers. And forget that, mate. There's real issues in the sandstone area there. Mate, our intern Hobbsy's going to do a deep dive on Woodsmith next week, which I'm very, very excited about.
It is a deep dive.
But it felt like, you know, in this instance, they provided this guidance to cut CapEx down to $200 million in 2025, nothing in 2026. So previously they were spending about $1 billion a year. There's all of this kind of uncertainty around bringing a potential partner into the process. They're going to do some studies in order to, you know, justify further investment with the partner. I think it all looks pretty complicated, in my opinion. Now, I don't think BHP's paying any money for this asset in their bid. They're like this one, you know, it's got a bit of a line through it, I think, to everyone other than Anglo and Duncan at the moment. But
he loves it.
He loves it. He championed this project. He's been a big champion from it since before he was even CEO, apparently. And as a result, for him to kind of this is as much of a pivot as you can do while still saving face. So it's a positive thing to say we're tapering the spend on this, because this was a big overhang. Like why are you getting all this cash flow from your copper and Kumba and whatnot and your coal, and then throwing into this potential fucking cash sink, which is Woodsmith?
Geez, yeah. mate, you'd never, God, it might have egg on our face if it proves to be a bloody phenomenal commodity, but hey, unknown yet.
I think you've hit the nail on the head there, Trav. I saw this one snippet written somewhere. I think it captured the sort of sentiment really well. It's a long-dated, cash-consuming greenfield project that management wanted more than shareholders. So I think in reality, if they wanted to sell this thing, I don't think there'd be any buyers. It'd be awfully bloody hard to try and sell. But it's a downright strange decision, right? Like, this becomes one of the three legs in which the future Anglo business is, you know, built upon. It's a bit bizarre. And, you know, yet at the same time, they're completely cutting off almost all of the funding to do it. It kind of says to me that they are thinking, or they are accepting, that it's not worth anything right now, but we want to save face, like you said, Trav, and, you know, potentially there's some option value way down the track in a, you know, unlikely sort of scenario, but who knows? And not to mention, Matty, there's some environmental concerns about this whole thing as well, which haven't yet been resolved.
Mate, environmental concerns, I've got ore body concerns, JD.
Ore body concerns, mate? They can't even get to the ore body yet. They're stuck in the sandstone.
Mate, you can get to it visually by a VRIFY model.
Tell me more, mate.
You can get there, mate. You can take any person, any investor, any person that doesn't even know anything about anything into your ore body with a VRIFY model. I want to be taken by Anglo into Woodsmith via a VRIFY model.
Do you think
3D
do you think the
engagement.
reason? Do you reckon the reason why Duncan isn't using VRIFY is because he's scared to show what might not actually be there?
I think we've established that as probably the only reason.
I got
that's pretty much like tax.
I got a point. Like, okay, so they've spent billions and billions on what is potentially an absolute doozy, and what would have been a better allocation of that capital? Use VRIFY AI to actually, predict some pretty attractive exploration targets, drill them out, and you might find something worth building. Not, you know what I mean? It's just the ROI is so bad if you choose a doozy and you spend billions of dollars.
Mate, they've found Woodsmith. If they had VRIFY AI, they probably would have found Goodsmith, and they wouldn't be in this bloody pickle. It's So,
can you imagine the growth if they use VRIFY in and around Kolwezi? It'd be unbelievable.
Jesus, holy snapping duck shit, JD! You've opened up a can of worms there, Cobber.
The market cap would probably double overnight.
Grant, I'll give you some numbers, mate. Grant at verify.com. Selling the met coal, boys.
Yeah, I find this one particularly interesting, right? So,
geez, you wouldn't have picked it.
I didn't. And I'm gonna play this snippet from. This is an abridged version of a question that Duncan responded to in the Q&A, which explains the rationale to divest the Queensland met coal assets that they've got there.
Secondly, on coking coal, there is some surprise in the market over this being included in the disposal set of assets. It is cash generative. You're still trying to recover volumes, and recent multiples have been quite low. So can you just elaborate on the thinking on that?
In terms of coal, there were three criteria, three very clear principles against which we look to the design of the portfolio in the future. The first of those is the traditional type of asset review in any mining company from time to time. You have a look at the quality of the assets in terms of their endowment, and that then is the first bar that has to be passed. And coal would pass that. Okay. The second of these buckets is portfolio synergies, and I think in the terms of metallurgical coal, that too would have been a tick. The third bucket is a very important bucket. It's one that's not traditionally used or spoken about in asset reviews or portfolio reviews, such as the one that we've currently done, and that is, how do you optimize the value delivery from the whole of the portfolio? Are you going to be able to get shareholder value recognition throughout the whole of the portfolio? If you're going to change from the current status quo to something that's different, what does the cost of that change look like? And is the optimal outcome as a result of that change going to be worth the cost of doing that change? Is what sort of strategic flexibility does the remaining portfolio or the portfolio that you have left deliver for the shareholders in the future? And in that context, in terms of portfolio complexity and daylighting the value of the copper business, daylighting the value of the iron ore business that we have, and allowing the flexibility for the development of what we think is one of the most astonishing ore bodies in the world, that's where coal fell down. And on that basis, we believe that we can use it to help reset the balance sheet by paying down debt by selling an asset that, relatively speaking, strategically, is not a fit to the portfolio.
Jeez, I'll get some coin for it.
I will, which we'll get to. But I found that a pretty interesting response. So, in essence, will we get shareholder appreciation as a consideration, right? So, what is he saying? We think that without coal in our portfolio, we will trade at a higher multiple because it daylights, in his words, daylights the copper and the iron ore, the high quality copper and iron ore. And so it's a bit of it's trying to be like this financial gamesmanship of, if we have less of the dirty stuff and more of the good stuff in the portfolio, we deserve a higher multiple. And I find that all of that kind of thinking really short-sighted in my view. And I'm going to go a bit deeper into that a bit later. But you also heard him talk about enabling some flexibility in the balance sheet. So by selling the coal, you'll be able to pay down debt, and that will be a factor in them actually being able to achieve some of the copper optionality earlier, which is something I want to talk about more. I think they missed a trick here, and I'm gonna discuss that a bit later. But what do you think, JD?
I thought that was a fascinating articulation from Duncan there, and it was really cool to hear the process with which they've thought it through. The way I see it is you've got kind of two ways you can go about it. You can end up with essentially a portfolio that looks exactly like or more or less like what BHP currently has, with iron ore, copper, and met coal. Or, you can do what perhaps, Teck have done in Canada and get rid of the met coal assets and use that cash, that upfront cash, you're cutting off your foot kind of to spite your face because you're not getting the cash flows down the track to, like you said, Trav, realize some of that copper value a bit earlier. So perhaps there's a bit more balance sheet pressure that is forcing them to do that I think that's obviously the case, that's forcing them to do that in the nearer term because, you can see from the way BHP go about their business that a lot of these major miners really value the cash flows you're going to get from met coal. But I think it's a tough decision that they kind of had to do, and who knows whether they'll get actually a better multiple down the track for it. But I found the articulation pretty fascinating regardless.
I don't know, where's your foot located on your body, JD? It's cut off your nose to spite your face.
Fuck. I was on a roll there and I got mixed up,
I
mate.
like it. I'm running with it.
So then there was the more, I guess, like more predictable stuff. Spinning amplats, like, heck, they've done it. That was cool. They're going to do it. They're going to pursue it. Wicked. Selling or spinning De Beers, interesting one. There was, the diamond business, mate. I reckon the name De Beers holds some value in that name.
Yeah.
But I don't want to own fucking, a diamond mine that produces higher than the long-term cost of diamond production.
Just get the IP on the name, Trav.
Yeah.
Like Dingo.
Yeah, it wouldn't be a bad name. They've got some nickel, which is, going to get probably shafted at care and maintenance sort of thing. Who wants nickel anymore? And then, mate, don't forget manganese. Like, they've got the JV with South32. Don't forget Gemco. We can't forget the mighty manganese.
Mate, imagine when she comes back online, Trav. Look at what the manganese price is doing. Might be some short-term sugar there, brother.
Totally. So they've got, Anglo has this non-controlling 40% interest in South32's manganese operations, both South Africa and Australia. Let's not forget Gemco for all of the hashtag manganese men out there, including us. So here's what Duncan has to say about that.
And just a quick follow-up, and sorry if I've missed this, but I don't see any mention on your manganese investment. What's the plan for that? Thank you.
Matt, hi. Thanks. You might be the first analyst that's asked us about manganese in the last 5 years. But I mean, as far as manganese is concerned, look, it's a great business and it's a great set of assets. But honestly, given the work that we've been doing over the last few months, that's on the to-do list, and we haven't quite got to the outcome of that at this point in time.
So
poor old manganese. Where's the love?
I know.
Mate,
Well,
if it keeps going the way it's going, I think they'll be kind of happy what happened to Groot Island did, because the cash flows from the other assets will outweigh that.
Yeah, it's amazing. Anyway, we should probably talk about like what's the read through on this strategy, right, that they put forward, and it's clearly that they're not engaging with BHP yet, and that's kind of the hardball approach, textbook kind of response. You're trying to maximize shareholder value right now, and if you ultimately want to engage with BHP in the long run, this way, what they've done right here, what Anglo's done right here, you put a plan to shareholders, let them decide what they want, and if shareholders back you in, it at least buys Anglo time where you hopefully get a value uplift. And if in 12 months' time Anglo is still on BHP's mine, then let them have a crack at a much higher share price. And when Glencore is in a better position to compete too, right? Because Glencore's got, their uncompleted transaction with Elk Valley, debt overhang, but a lot of that will be, a lot better in 12 months' time. So no doubt the strategy here is being influenced by activist shareholders that build a position on Anglo's register, such as Elliott too. And look, I'm probably against the majority in this view, but I think they missed a trick in declaring an intention to divest their coal. I think that sort of action was all the trend of 2020, right? Like when the big fund managers like BlackRock and the works, and they were all divesting you if you had too much of the dirty stuff in your portfolio. And I genuinely think we've moved past that. Like as of 2024, met coal is literally a critical mineral. And if you don't understand that, you are a fucking twat with a peanut brain. Like it is critical, whether we like it or not. It's critical, and thankfully, big capital is starting to understand that too. ESG 3.0 is a pragmatic approach to this stuff, which has so much nuance. All of this, like decarbonisation, the energy transition, there is so much nuance to it, and I think capital is starting to appreciate that nuance, and that's flowing through. And look, Jada, you put this chart in our newsletter this morning showing the relative share price performances of the major miners. And look at Glencore in the light blue there. So everyone used to point to the D-rate of Glencore to substantiate the stupid portfolio decisions, you better sell your coal, otherwise you'll D-rate like Glencore. And look what's happened to them in literally like the last 2 months. They're re-rating higher again after copying it for a while. Glencore, in my opinion, they're extremely unlikely to divest their coal. Like, we've talked about the activist campaign that it's got going on there from some of its shareholders to make them keep their coal. And as it relates to Anglo, like, I don't think you want to be late to a trend. You want to be early. And I think the new trend is a pragmatic one. Retain your cash cow coal assets and use their cash to help fund your copper expansion. But that's just my potentially minority opinion on that one.
JD, to confirm about this takeover code side of things, they've got till May 22 to put a bid in, but a firm bid. If that goes in after... I think the wording is to announce a intention to make a firm bid or, the opposite. Yeah, and so once that goes in, if there's another party that comes to the table, like say Anglo knock that bid back and then another party comes to the table, can they put in another bid within a year if there's a superior proposal?
Yeah, I think it does.
They can, yeah. So it's only if no one comes to the party.
You can get into a bidding war with you. I think so. I'm not familiar with UK takeover laws, but I'm sure it's just like it's all considered the same kind of offer thing. If you just bloody up an existing offer or something like that, I don't know. But
if there were another bid come out the woodwork, it would very much be in Anglo's intention and their board to allow the timeline to expand. If that's what they had to do to have competitive tension.
Yeah, that's what I'm saying. Does that, like, if the BHP put their firm bid in before 22nd of May and then another bid comes in and they're in that 12-month period, can they go over the top of that bid or they can't for a year? Or it's they just can't put an improved bid themselves on top of a knocked back bid after 22nd of May without another third party?
That's right. That last bit, yeah.
Yeah. There you go. Do you reckon they're trying? Yeah. Interesting. I was thinking maybe are they trying to get them out so they get another party in without BHP being able to compete with them, but they will be able to compete.
You're thinking competition, Matty. Now,
how good's competition?
There was a competition going on in Miami last night. It was a tennis match, all right? It was Duncan and Mike, they were playing tennis, and there was some back and forth between the two, and I loved it. I welcome more of it. I want to see this in every transaction. In Mike Henry's speech, it was a pitch, really, to Anglo shareholders. The pitch was, we, BHP, will deliver more value with this portfolio than Anglo, and you can benefit from that upside. I'll give you guys a preview of the tone from Big Mike Henry of BHP.
Now, stating the obvious, we are disappointed that Anglo have chosen not to engage with our offer to create value. There are things to admire about Anglo. They have some great assets and people. We happen to believe that there's more that can be unlocked through our proposal. It's a unique and compelling opportunity to unlock significant synergies through bringing together our two highly complementary world-class businesses. We think.
Now, Matty, there was one sentence from Mike I have to play for you because it happens to include two of your most hated phrases in this industry within the one sentence. You ready?
I think it would take an already great story and make it even more exciting as we look to unlock a win-win situation for both sets of shareholders.
Oh, Mike, never buying BHP shares.
Great story, win-win. God, you love them, mate.
Bloody, how good's a win-win?
Oh, come on. Love a win-win. Love a win-win.
Everyone thinks they can have a win-win with us. Bloody hell.
And when I say the message from Mike was a pitch to shareholders, this is what I mean, right?
Does Anglo's restructure mean for BHP's interest and approach for Anglo?
Well, look, James, as I kind of alluded to in my speech, we believe that the proposal we have on the table is quite compelling. At the end of the day, it's a 50% premium to the unlisted assets and the implied value of them pre our offer. 37% premium to the median broker NAV for those assets pre the offer. At the end of the day, it's going to be up to shareholders. They've got to look at the respective plans, decide which one they believe is going to create the greatest value soonest, And they have to make a determination as to the likelihood of execution of those plans, including which team they believe is more capable and has a better track record of execution. It's that simple. So the Anglo plan doesn't have a direct bearing, other than it, perhaps gives shareholders greater clarity about the choice that they have ahead of them.
And recall that like a big part of Anglo's position was the inadequacy of the deal structure put forward by BHP. It was too complicated. BHP needed to spin out two things beforehand. It was all very hard. Here's what Duncan said about that point.
We do not see the BHP transaction as being in the best interest of our shareholders because it simply does not reflect the value of the strategy that we've just outlined for you today. The structure BHP has proposed is highly complex and generates risks that will be borne disproportionately by Anglo-American shareholders. By contrast, I have presented a vision of the future that allows Anglo-American shareholders, rather than BHP's, to get the full upside.
Well, didn't that strategy come on the back of the BHP bid butt?
There was a portfolio review underway. It's definitely
right.
been accelerated. They'll say it hasn't, but it's 100% been accelerated, and it's probably evolved as well. Yeah.
They said 100% it had been accelerated because of the BHP bid.
Are you following the tennis match? Ping, pong. I got more. Now, Mike points to the fact that the Anglo still want to spin Amplats in their strategy revamp, and so the proposal is doable. Listen.
Now, what we see today is some variant on the approach that we've brought forward, which involves spinning out one of the assets, which I think is a pretty clear indicator that it is doable, and that any concerns around flowback and so on and so forth is all manageable, which is what we've been saying from day one. So,
but Duncan is adamant that the risk would be unfairly worn by Anglo under BHP's plan.
I should also be very clear that we believe that value delivery in the separation of Anglo-Plats is much better delivered by Anglo-American rather than as part of the BHP takeover proposal. The Anglo-American team has separated a number of other businesses, including the demergers of Mondi and Thungela. These were complex, but delivered successfully over time. If, however, we try to execute the takeover at the same time as two demergers, it's a step change in risk and associated value implications. It involves trying to get all the approvals on an interconditional basis, all at the same time. Any regulatory process comes with risk. And if structured as proposed by the BHP takeover offer, the risk falls disproportionately to Anglo-American shareholders.
Oh, bang.
What is it, 40-30?
Bang. 40-30.
40-30.
We're going to get to juice because it's no surprise that Mike gets asked in the Q&A if there's a different deal structure they can try to get around this complication.
Just when we think about the offer that's been put forward, it seems to me, as probably many folks would agree, that the precondition to distribute and specie or dispose of the Kumba and Amplats holdings is going to make things a little difficult to move it forward. I just wonder if you can comment on whether there's an iteration that perhaps puts that after the fact and makes it easier for shareholders to kind of compare the two paths forward.
But I would say that, what we're proposing here, and I know it's been referred to as a novel approach and so on, this isn't novel BHP thinking. Shareholders were calling for it previously. Brokers have called for it. It's included in our proposal, and you see some variant on it today in the alternative plan. So we actually believe that this is wholly executable. In terms of spinouts, we have previously spun our South 32, our petroleum business. Anglo themselves have spun Thungela, Mondi, Anglo Gold. So the path towards spinning businesses out is relatively clear, and there's a long track record of being able to do that successfully.
Deuce, what do you reckon?
Deuce.
So all this back and forth, right? Like tennis going on in front of our eyes. It's beautiful. This is why I love when deals get legs, so we can discuss the merit of the ideas in public before, there's just an announced deal and we all just have to bloody compute the numbers and be like, look back in 10 years' time and say, well, you just fucking eroded a lot of value, you dickhead. But this time, mate, it's all in the public. We get to talk about it. We get to watch the tennis game in front of us. It's just awesome. It's fun. Fun for us, that is, not fun for Mike Henry.
One of the things that's been quite disappointing, of course, is that our strong preference was to be able to hold these discussions with Anglo in private. Rather unfortunately, it got leaked, and that on the back of that leak, then people kind of came up with views as to what was driving the proposed BHP structure.
I found that bit interesting because my running hypothesis beforehand was that BHP leaked it themselves. But anyway, Mike's keen to...
He didn't say it was... he didn't say it was him from BHP that leaked it.
Anyway, there you go. I found that little whinge about the leak pretty interesting. There's one last snippet I want to play, Matty and JD. And
it's like we're in the room, Trav. How good is it?
It's so good. This one is the one I want to focus on.
Both BHP and Anglo have attractive growth options. With the benefit of BHP's capabilities, significant cash flows and balance sheet strength, the combined business would have the financial capacity to advance these value-adding growth options.
Sorry, Mike. BHP does not have good growth options. Remember, part of the reason you acquired Oz Minerals was because you don't have good growth options. And how's West Musgrave going for you? Huh? And no, I'm not excited about Jansen.
Tools down there,
that does not count as a growth option. Anglo, on the other hand, does have good growth options. The copper expansion potential across that portfolio is unreal. And BHP has a phenomenal balance sheet. Anglo doesn't. This is the crux of the debate, right? BHP's pitch is compelling. With our balance sheet, we will realise the amazing copper optionality from Anglo's portfolio much faster. And to compete with that, Anglo has to simplify its portfolio and notably divest its beautiful coal assets just so it can signal an ability to expand its copper portfolio at a similar rate to what BHP otherwise would be able to do it. Sell the coal, delever the balance sheet, invest in expanding the copper at a comparable rate to BHP.
I think that summarises the sort of state of affairs pretty well, mate. I think that is it in a nutshell, and I'm pretty keen to see where it kind of goes from here.
Where is it going to go from here, JD?
Well, I think we've kind of articulated the timeline with what we've said. If you're asking me for a forecast, I don't know. Listening to that, where all the snippets have come from, the speech by Mike at Miami, he mentioned the word disciplined 16 times in that speech. They have constantly stressed, they walked away from that deal they did that were the competing bids for Noront in Canada, and they constantly point back at that and say, look how disciplined we were. There's all this, talk about their capital framework and how they manage capital responsibly. So, would they come back and in the next 5 days and put in another bid? I think it's anyone's kind of guess. I would lean to them not doing so and this sort of playing out, and perhaps in 6 months, in a year's time, just seeing where things are and seeing if they want to come back in and have another swing. But that's not a high conviction pick. It's just sort of a gut feel.
I'll take the other side. Yeah, I think you act now.
6 days.
I think it was opportunistic. Like, it's as much about as where Anglo was. It's as much about as a view on changing commodity dynamics happening right now, and it's as much about where the interloper field is at as well. Like, this is the opportune time for Mike to make his move. I reckon an uplift higher than the last bid.
Last proposal.
And
non-binding.
And what's crazy when I reflect on it, right? To win this fight now, BHP has to talk about the asset it doesn't like to talk about, coal, because that's the difference here between the two sort of paths ahead, right? So in BHP's pitch, of course, they talk about them being better operators and everything like that, but in BHP's portfolio, they're going to retain, their coal assets and also experience synergies from Anglo's met coal assets. And in Anglo's path forward, though, that just goes to the wayside. And retaining the coal should be a fighting ground for BHP, but they won't fight that fight publicly because they're too scared to. And by the way, I hear that in Miami, word on the decline is BHP is being very vocal about not bidding for Anglo's coal assets. Should they be divested, et cetera, et cetera. So I just think
that's a fascinating point that I totally believe. I don't think they would bid for them on their own. I think they would love to. I think they would bode really well with the assets that they have in Queensland there. I just don't think we're far enough away from that 2020-21 period, and just the way institutional shareholders might respond, but that's not to say that they don't firmly want them and that there are, some sort of synergies to be had from putting together the minds that they have with what Anglo has.
I reckon the only bloke I could probably heavily rely on for a good crystal ball prediction for what's going to happen next. I respect yours, JD, and I respect yours, Trav, but Kenny Keogh, he's usually pretty on the money.
He is. He's actually a bit of a future
deal
reader.
He's a bit of a deal junkie.
Yeah.
Kenny Keogh.
He sees things like 4 steps ahead, and then he kind of works backwards, and he just knows the next play.
And you know why I'd probably respect his opinion here? Take a look at this picture. That is a charging station that Kenny Keogh and Silverstone put in at BHP. So who else would you want to rely on for some insight behind closed doors for BHP and Anglo than Kenny Keogh? I tried calling him today.
How did it go?
His phone's off.
Oh.
Indicating to me that he's probably liaising with BHP and Anglo as we speak about probably what the best steps are going forward. So he's probably out of range. So, like Mindside Power and it's too easy for him. He's got Silverstone running like a bloody autonomous factory. So, mate, global M&A deals is probably the next step for Kenny in Silverstone. So,
it makes sense.
Kenny, when you get back in service, can you please give us a buzz so we can actually know what's going on with BHP and Anglo?
I'm left a bit confused until you're back, Kenny.
Yeah, so mate, next episode we talk about BHP and Anglo. We're probably going to be joined by Kenny Keogh from Silverstone. So to really sort of put a nail in this coffin, I think. So love your work, boys. To finish off, that was a show in itself.
Oh, wasn't it just? Isn't it cool when the CEOs just bloody, fight each other in their polished ways?
I was about to say, like, it's like, just handbags going everywhere.
It is. I'd prefer a few more F-bombs out of their mouths, but they're just too sophisticated.
Yeah, listen here, you fucking prick.
Come to the bike rack.
I think the Miami speech by Mike was the most animated we will ever see him. Like, I've listened to a couple of his speeches in the past, and that the sort of passion through his restrained, grit was the most animated I think we'll ever see Mike Henry.
Who do you want BHP to take over Anglo? Like when you're rooting for a side, like who do you have an affiliation to BHP because they're the big Australian versus I feel like it's a little bit
opposite.
Really?
I'd love to see Anglo fight them off.
Oh no, I've got the it feels like
you got the allegiance.
It's like Test match cricket, it's the Ashes. Yeah. I'm like, fuck you, Anglo.
I want to see him fight them off.
Yeah,
that'd be interesting. I'm sure there's a lot of investment firms that don't want to, that have got a lot of Anglo stock. But, don't know. Who are you rooting for, JD?
Oh, I'll probably go your side.
Such a rooter you are.
Mate, I'll probably just go the underdog, I think Anglo. But, yeah, something's clearly got to change there. I think it was great for BHP to go after them at that opportune time. I think they'd been scoping it for a long, long time, and it was sort of masterful in the way they sort of picked it out and actually did something about it. Like we said, haven't seen it in a long time. But it'd be kind of cool to see the smaller, really beaten up player shrug it off.
I'd like to see your plan taken put into action.
Thanks, mate.
And in a year's time, if they simplify the business and they do get a bit of a re-rate, and then BHP has to pay more for it,
and
to get the copper.
You know what?
I'd like to see that.
I don't actually think they will. I know I sort of said that prior, but I think BHP will look in future, and it'll just be too expensive if the thing goes half right that they want to do, and the opportunity will be kind of gone.
Yeah.
I think it is kind of now or never in a sense, because a lot of the commodities in which Anglo are in, cyclical troughs, and they're in a really tough position. And I can totally see in 12 months' time that the Anglo price is better than where it is today, and the opportunity is just gone.
There's that outlook too expensive will be very dependent on the outlook of copper and the price of it in a year's time.
Yeah, there's another like part of it all as well, and this will be BHP's pitch to the shareholders of Anglo is like, who's more backable, right? Like, can you really back Duncan? You know what I mean? Like he's championed probably a dog project. He's this is his moment where he's revved up and they've rebounded a bit. He's under pressure, but it's been a bit of a disaster for him since he's been at the top. And I think the pitch that the BHP will have to a lot of Anglo shareholders is like, do you back me or do you back this guy?
If I were an Anglo shareholder, I would love BHP just to come through with a little kick up in the next week, and I'd take that.
Right. Finish off on, I think this was 2 days ago, I think, the old Patriot Albemarle MOU. So,
last night.
Oh, was it last night? I thought it was yesterday.
Yeah, it's the RV, yeah.
They try to distract by putting out infield drill results this morning.
Yes, yeah, that old chestnut. So what's happened is Patriot and Albemarle have chosen not to extend their MOU that they had. So it had a 9-month time frame on it. So it effectively means now that any exclusivity that Albemarle had with, portions or all of future mine production at Corvette are now expired. So stock got hammered on the news yesterday. I think it was like bloody 10% or something. Rebounded today. Looking at the spark chart here. But they'll be Patriot will be looking for other strategic partners going forward. So not known, but what Albemarle plan to do with their I think it's about 5.4% they've got in Patriot now after a bit of dilution and stuff. So they subscribed for that stake July last year. Canadian 15.29 and stock's sitting at 8.14 now. So done 50 million Canadian on that investment so far. So
remember last time we looked at Albemarle, their balance sheet is pretty cooked.
So they might be block trading that bastard.
Oh, yeah.
Who knows?
But even their capability to, go ham downstream outside of their existing scope is probably pretty throttled if you got balance sheet woes.
Yeah, so, and because that MOU, it was to study the viability of a downstream lithium hydroxide plant, so which would be integrated with Corvette and located in Canada or US or located in bloody Quebec, but not sure if this actually meant like say Patriot would be an actual JV partner in constructing the downstream and have exposure to it, or it was just securing the offtake.
It's an MOU. Who knows?
Yeah, not sure. So, but if it means they don't have the downstream exposure, probably not the bloody worst thing, I don't think. Look at what downstream exposure's done to IGO with friggin' Kwinana.
Could be different in North America where there's just infinite incentives. But
yeah, possibly. Yeah. I don't know. After what we've seen in the industry and what MinRes have done, I think it's a lot easier just to sell the bloody spod to a converter without being exposed to the performance of the converter.
Yeah. Yeah.
So I'd be keeping my eyes out, boys. So talking about future partnerships. So Ken Brisden did a bloody interview the other day and, mentions about Korea and everything. So be looking at like Japan and Korea for future offtake. Very focused on obviously non-China, Japan and Korea are, even though they're bloody close, they're considered Western, you'd say.
Yeah. You've been on this for a while talking about what's going on with Japan, Korea, Australia, Southeast Asia.
Like a dog with a bone trap. Here we go. I'll play a bit of the interview, which is interesting. He had a yarn with, mate, this guy is the OG stock media legend, Tom Petrovsky from ComSec. How good is Tom Petrovsky? Look at him.
Yeah, they're a really credible counterparty, aren't they? They've been a first mover in the West for development of chemical initiatives in lithium. And of course, they have a big multinational business in lithium chemicals. And we've enjoyed the relationship with them. So a constructive negotiation to have them participate as a shareholder in Patriot. And in return, we'd facilitate the discussion about linking mine capacity, a certain subset of the mine capacity, to chemical initiatives in North America. And we've really enjoyed the relationship with Albemarle, and we'd hope that they have as well. Now, as it stands, we've still got more work to do with them as to ultimately what we do to connect the mine and the chemical facility. But at this point in time, nothing commercial locked down. It's all dealt with at a memorandum of understanding level. but a constructive relationship nonetheless.
A lot of past tense in that, the way he was saying that, because that was done last week before this come out, and like it's been a very good relationship, and I hope they've enjoyed it too. And so it was whether writing was on the wall and from whichever party, like they said, it's mutually agreed, but it looked like the way he was talking then, it looked like it was already well ended. So whether whoever bloody pulled out. So
Flagging, yeah.
Possible M&A landscape for Patriot is interesting, I think. You'd nearly scratch Albemarle now, possibly. They were obviously one potential sweeter.
You wouldn't scratch them, mate. I mean, heck, they could still offer a script deal. That doesn't hit the balance sheet as much.
I think until the fee study and the permitting is completed and all that, like it'd be, I don't know. Do you think we'll see any M&A till those hurdles are met, or you reckon someone's going to be opportunistic at this time? I
think the relative value differential between PMET and its pool of potential acquirers it's more attractive now than it has been the entire duration of our podcast, I think.
Oh shit, yeah.
It's come
under
off,
half the price.
It's come off a long way, but the contenders who could bid for it haven't. And if you bid in scrip or whatever, that's the right environment to do it.
Fuck, I've got a scenario for you.
Yeah, what's that?
How cool would this be? Do you want me to play it out for you?
Tell me, Matty.
This isn't a tennis match. This is like a 10-pin bowling thing. Mate, what about if Pilbara Minerals do a share buyback?
Yeah.
They're 21% shorted at the moment. The buyback squeezes out the shorts.
Yeah.
PLS goes up a good chunk.
On the squeeze. Yeah.
On the squeeze.
Yeah.
And then use the elevated script to propose a scheme of arrangement with PMET.
Yeah. And then, if you get knocked back by PMET, you've got to leak the deal then and always reference the unaffected premium, which is in relation to your elevated script. I like it, Matty. It's very innovative.
If that happens, I feel I should be entitled to a clip of a ticket somewhere. That'd be the logical thing to do. All stakeholders, do not forget about me. Beautiful, boys. I love your work. Good. Fucking love it. Righto. Thanks to all the bloody... I feel like a word bigger than partners should be just friendships of the show. VRIFY, GetWet Solutions, DSI Underground, Silverstone, CRE Insurance, WA Waterboards, Brooks Airways and K-Drill. And don't forget about Spark Trader, boys, our new little partner. We use Spark. Everyone should use Spark if you're an active ASX trader. Hoodaroo, money miners. The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.